I'm Christy Duffy for Smart Trend News. Caterpillar, a key earnings report came out this morning. Investors consider the company's results and outlook an economic indicator. The company reported a first quarter EPS of 50 cents ex items, topping estimates of 39 cents. Revenues in the quarter fell 10.7% year over year to $8.23 billion, short of the estimate of $8.8 billion. And the company boosted its full year 2010 outlook big time, now seeing a full year 2010 EPS range of $2.50 through $3.25 on sales of $38 to $42 billion. Caterpillar hit a $7.74 per share price after reporting on its growing profits this morning. This was the heavy machinery company's first report of an earnings rise in nearly 2 years, and it is right now the largest gainer on the Dow this morning. Joining me now to talk about the stock and its earnings results is Vice President and Senior Research Analyst at Avondale Partners, Ted Grace. Ted, thank you for joining me today.
Glad to be here.
First off, what was your EPS and revenue estimates for Caterpillar? Were you pleased with the actual results?
Yeah, we were. We've been very bullish on the stock. We initiated with a buy rating at 59 about a month ago, and the stock's obviously had a huge performance since then. We actually had low expectations into the quarter. We were at 23 cents at the bottom line, and our top line estimate was just about 2% below what the company reported. So, our thought was that the seasonality would take a little longer to build, and this was definitely a positive surprise. For us, really, it was driven by better than expected margins in the company's machine segment.
Well, they were really poorly affected by the housing crisis. Do you think that these results mark a recovery for the company and a recovery for the economy?
Well, certainly they probably do reflect a recovery for the company. But it's really, when you think about Caterpillar is truly kind of a global macro-oriented company. U.S. residential is a very small part of their business. Global residential in itself, we think, is less than 10%. So what really drove this is better than expected performance out of emerging markets, primarily Asia, Latin America, and the company's core commodity markets, which would be things like base metals, energies, which is really kind of why investors are attracted to the stock at this point. People are not and should not be playing cat for recovery in U.S. residential anytime soon, and the company's expectations actually were ratcheted back on U.S. residential.
Did you see any other weak spots in the report?
Well, I don't know that I'd use the term weak spots. I would say that U.S. and Western Europe, which are two of the company's largest markets, and Japan would be the third, certainly are not showing the kind of growth that you're seeing out of the developing world. That said, it seems like numbers have started to really kind of find a floor, not just as it relates to CAT's numbers, but as we've heard from other global construction equipment companies. There's been similar commentary, whether it's a company like CNH, about 20% of which is construction equipment. Certainly other global commodity-oriented companies have had bullish outlooks. Volvo would be another that's certainly been positive on the emerging markets, and yet cited kind of flattish North America, Western Europe type outlooks.
Do you see the company hitting the full year outlook that they projected for themselves?
Yeah, I do. The range of 250 to 325 certainly would look quite attainable. I think it's important to keep in perspective. This is the first year of the company's recovery off the trough of earnings, which we saw last year. So investors are correctly focused more on kind of 2011, and we would argue truly 2012 numbers when they're trying to justify the stock price. When we do some back-of-the-envelope math, looking at the company's historical mid-cycle multiple and typical cost of equity type expectations, it would look like the stock at 70 would be discounting a 2012 earnings estimate around or north of $7. We were the street high coming into the quarter on 2012 at 565. Consensus was closer to 5.25. So what's going to be really important to CAT is seeing what happens to the street's out-year estimates, if you will, calling that 2012.
What are your estimates for the next quarter, for the quarter we're in now?
Well, I was at 50 cents prior to the company reporting the first quarter. Street was at 69. Certainly those numbers are under review, and it would be inappropriate and premature to kind of tell you where I think I'll be going.
Okay.
Obviously it was a strong quarter, and we wouldn't look for them to take a step back in all likelihood.
Okay, and due to the encouraging first quarter results and the upbeat outlook for the full year, would you tell investors that this is a definite good buy right now?
Again, we'll need to see what happens to the 2012 numbers. When we, again, initiated on the stock a month ago, stock was at 59. We had a $70 price target. That implied 18% upside over the next 12 months, which we thought would be to the late 2010, early 2010 time frame, or 11 time frame, excuse me. That would have implied 20% upside total return type of numbers. It's gotten there in a month. And so, again, what's going to be most important for this company is ongoing beat and raises. We certainly think this quarter bodes well for that prospect. But it's certainly come pretty far, pretty fast, and I think the market's going to need to digest some of this move before you see another leg up. But no doubt that, great momentum at the company, and you're definitely seeing a lot of bias of investors moving out of the early cycle industrials into mid and later, and that certainly bodes well for Caterpillar.
All right. Thank you so much, Ted, for taking the time to speak with us today. Ted Grace is a vice president and senior research analyst at Avondale Partners. You can find more analyst insight here on our YouTube channel, Trade the Trend, as well as on our website, tradethetrend.com.